Okay, thank you. Well, I think we have the most interesting topic at the conference, bridging Web3 into existing finance. So I thought it would be great for the audience if we started off. I wanted to talk about the value proposition of Web3, but why don't we talk about first what does Web3 mean? And I'd like to throw that out to one of our panelists if they want to talk about what Web3 means to finance.
You want? I can.
Hervé, you want to take that? Okay.
I'll take this one. So I have a background education in computer science, so excuse me if I make a reference with a bit of a developer analogy, but the way I look at it is Web 1, or the initial like a web, how we see it, was more like a read access only. So you have information, access to information from a business, for instance, but you could not interact with that. Web 2, you start to have the read-write, so you could interact and having like an active role, but it was still centralized. So enable like some new business models such as Airbnb or Uber, but still you see those big players were centralizing like the activities. And finally, like Web3, I will define it as a decentralized web in a way that you also enable this intermediation and you add to the read-write the own. So now you can own, so you be like in control of your identity, of data, but also like as an ownership in terms of the business model. And I think we're going to detail more during this panel.
Okay, thank you. So given that, and given recent events, but the next question that I have are, do centralized opaque governance structures, which we often see in existing finance, do they often end up failing the individuals that they intend to serve? Perhaps we can talk about custodial versus non-custodial. Existing finance is, for the most part, custodial. Anton, do you want to take that one?
Sure. I think it was already enough covered. Recent events with FTX, of course. And it's just yet another very strong example of the differences between the custody and the nature of the custody of the funds. All of the recent events showed the critical necessity of the users of being in control of their own money. Starting with how the traditional finance works and how traditional money works, there's always an institution, there's always a service, a company, an organization, a government, where you have an agreement with them that they keep the money for you, they keep your money for you, and then they essentially offer you a service. The beauty of essentially what crypto and what DeFi produces is that you have an ability to self-custody your funds, and it doesn't cost you anything. You can do it easily, you can do it securely, you can do it safely, and this is where the biggest difference is. It's not just in the word of decentralization or centralization, it's actually in the programmability of the money. What can you do with your own money? And what choices does the industry offer you? So the biggest critical difference between what was in Web 2 and what offers in Web 3, the services offer you opportunities, they offer you primitives, and then you as a user, you vote with your money. What do you want to use? And then what do you not want to use? And I think this is where we have to start with understanding that the big difference and the major difference and the critical difference is how we as an industry, or again, as users of this industry, can produce and go further, is to start finally accepting the fact that we have the power. If you have the money, or the money that you have the control over it, and then you have to vote with your money into what and how your programmable money can do.
Okay, so following up on that, I want to throw out another question for our panelists to think about. So in Web3 crypto markets, we don't have a government as a bailout partner, right? And Genesis, what Genesis is going through right now in trying to raise money to stay solvent. So is that a good thing? So the survival is solely based upon the market, right? And will that prevent zombie companies from existing in the future? Would perhaps Julien or Manoj like to take that question?
Yes, so pleased to meet you all today. I'm Julien from Sparkle Ventures, just to make sure that we identify each other. So as Hervé mentioned earlier, Web3 is the ability to transfer value on the internet. What we've seen over the last 6 years since the beginning of a smart contract in 2016 is clearly the emergence of a new ecosystem with many players trying to organize this ecosystem in absence of, I would say, standardization and somewhere a regulatory framework. We recently, of course, we've seen the limits of such a system, which means what we can learn from what happened recently is first, human being nature that is not changed by crypto and decentralization. Secondly, we've seen the fact that centralization scaled very rapidly. FTX, in less than 3 years, they moved from 0 to $32 billion company, while decentralization is hardly struggling to scale up for reason of cost of transaction, smart contract issues. So we see also there probably a bit of limitation in decentralization. There is a bit of illusion as well around decentralization. Probably you know that Serum, which is a decentralized exchange around FTX ecosystem based on Solana, which is the blockchain infrastructure they were facilitating transaction on. They were keeping their private keys. They were managing the private keys from a centralized with a centralized organization. And that's probably explained to the whole world that decentralization works, but at some points you need a bit of, at some degree, a bit of centralization. Also, we've seen that you had two models historically, which were the model of to move from trustless to trusted. You had, for example, Coinbase, who used their regulatory framework to be trusted by clients. And you have FTX, which, at the opposite, they were using more PR and marketing to be trusted by their clients. And clearly, from now, you have only one way to be trusted. And ultimately, we'll see probably with what happened with Genesis, more proof of reserve, more proof of liquidity, proof of identity. But ultimately, what we've seen post-Lehman, we've seen the Volcker rule, which was the way the banks were doing proprietary trading, proprietary investment. Dodd-Frank, which was also constraining the way the banks were managing their balance sheets from a risk-weighted asset point of view. And that for sure will impact this industry in terms of probably we'll see more frameworks of standardization with auditors, rating agencies, regulation, of course, and perhaps analysts very soon. So I think we are moving toward a more a world where existing traditional players will bring more trust in this ecosystem as well.
Yeah, thank you. So Manoj, I wonder if you can give your perspective as to, we have lots of investors in the room, how should we approach investing in Web3? Perhaps what your perspective might be given recent events. I certainly feel that the technology is real, and certainly what we've seen in the financial markets was centralized organizations that had very little transparency, and personally, I don't feel that affects the technology, but Manoj, what's your perspective?
Firstly, thank you all very, very much, and thank you to Raha and her team for a wonderful conference.
Your microphone doesn't work, I think.
Sorry? Can you all hear me?
Yeah, it's good.
Yes, okay. Thank you. I just wanted to say thank you to Raha and her entire team at the AIM Summit. I think one thing that is very, very essential, the word I would use to describe Web3 is one needs to have a lot of patience. Rome was not built in one day. As we all adopted from Web 1 to Web 2, it took time. Things take time. We have seen a significant amount of hype versus transparency. That will continue. However, what recent events have shown us is we've been able to differentiate the signal from the noise. And if you approach it from that point of view, that transparency element will always come through. And the adoption will happen. Blockchain, Bitcoin, they're not going anywhere. They're here to stay. That's guaranteed. And adoption is going to kick in. We've seen recent events by some of the big bulge banks getting into this space. They are looking at it because they have a large retail base. They do want to be marketing products to them. It is going to happen, but they're going to tread cautiously and carefully. And the same way that I look at the media space, what has Web3 done? It's given ownership back to the creators. It's allowed them to go out there and get a proper share of their revenue, which if I just take a simple, if I go back and look at the traditional model of the music industry, and they go and sign a deal with any record label, the recording artist gets 12, 13%. This is all changing right now. So this is not going anywhere. One does require patience. One needs to do a lot of homework and just watch it. This thing is here to stay, for sure.
Okay, yeah, let's pick up on that. Let's talk about business models in a Web3 world, token incentivized models, and what that may offer. So will decentralized business models drive out the middlemen, the rent seekers, what Manoj started to talk about in the creative industries? And what might be the opportunities for investment or the opportunities for builders?
So I think one needs to have a platform approach. I don't think the middlemen are going anywhere. Access is still required, but you need to be on a specific platform that has the right tools that can actually execute, and that you have a level of transparency so you can see how things are going to play out. And it is done by having the right people on the platform and having execution teams that can actually deliver, for example, in our business from a transmedia approach. And that's how we see things.
I think you also have to keep it to the basic, in a way that what problem are you solving? And it's not, it won't solve everything. Or we hear about like metaverse, NFT and others. But I think if, as long as those startups are customer-centric and solving a problem, then they have like potential and there was to look at it. Personally, I like everything which is enabled thanks to the technology and just like this environment. So you see like new business models such as the play to earn, health to earn. So such of those models were not possible before without the technology. I think was to have a look at it, keep that in mind. And in general, like all like the different, all the synergy or what could generate such an environment such as metaverse where you cross border. So it's really like community driven. So it's a new distribution channel for any type of company, basically, ranging from banks we see, same than big brands such as Nike, for instance, to reach a new audience, but also like to address the needs, I believe, from all the young generation, which just live into it from the beginning.
Yeah, Julien, you want to pick up on that? Because I know that you're focused a lot in that space.
As Hervé and Manoj said, it's a fantastic disruption, and I think we still underestimate how it's going to revolutionize our lifestyle. Digital ownership, it's of course the ability to retake ownership of the data we create with through digital consuming acts, but it also the ability to be part of a community, to get a deeper engagement with community. Of course, brands are communities, games are communities. I mean, political parties are communities. We see that across all layers of a lifestyle. You belong to a community one way or another, and the digital ownership is going to give you access of more, of course, ownership, but also different other utilities. And we think the first established proof of concept, you probably heard about Bored Apes, which is the NFT, the PFP, so the profile pictures that some people are using on social media. So this just highlights, it's a proof of concept. It highlights the way that you can be part of a community, which is a brand, which is not coming from an existing historical brand, so that it comes from the creator economy. And the creators, musician, as you mentioned, movie directors, writers, book writers, they all have the ability now to get engagement with their community directly and transfer the ownership through internet. And that's going to be a huge change of consuming behaviors over the next decades.
Yeah, thank you. New business models. Can we talk about investment opportunities and founder project opportunities that may benefit society? So perhaps let's circle back to retail finance. And what about maybe, Anton, I know you're working in this space, if you can talk about mobile digital wallets, banking the unbanked. We have about 2.5 billion people in the world that are unbanked. And so what can Web3 offer retail finance?
The good point here is that if we look into the distribution or the channels that finance currently works in different parts of the world, if we're talking about the developing regions, we could see that some countries or even entire regions, they skipped entire generations of technologies. Something, for example, like African region, they've never really got into the debit credit card space, and they just leapfrogged it straight to mobile wallets. What's happening here with Web3, and I think we talked a lot about organizations, and there was a great question of you about the zombie companies. The great part about Web3 is that you have to understand it's not about companies, it's about the code. And then for as long as the blockchain that it runs on lives, the code will do exactly what was built to do. You don't need people, you need the logic. So that is the biggest opportunity, and this is the biggest threat at the same time of Web3 in offering you new services, or even offering specifically, for example, finance part. Finance is regulated all around the place. So when you're building something on Web3, you still have to consider the jurisdictional legal aspects of where you're trying to implement. Web3 can be global, but then where the customer is, it's local. So you have to adhere to that. But what's interesting in this space is that the services that we can provide, so what we are doing is that we are essentially generalizing primitives. So whatever you build on DeFi, whatever logic it does, if that's the lending protocol, if that's the yield generation platform, if that's derivative, if that's a new PFP project that creates additional utility as a social club, closed club, whatever you create, we generalize it to make sure that it becomes available for you to use in the daily world. That creates this bridge and the connection. So what we do on chain will outlive us, will stay there. The code is there, it's immutable, and it does only what it has to do. And that's the big difference, and that's the big concept. So regulations will change, the new governments will come, the new countries will adopt new technologies, but then the Web3 is here to stay just for the fact that you cannot influence it. You can try to shut down the blockchains, but what are you going to do with the code? You can try to regulate it. You can try to lock down the gateways into crypto and not. But that's what attracts the people, because they are treated the same way. The code doesn't care what color, what shape, what form, who you are, what you are. Everyone is equal, and that's something that attracts.
But that's still early days. Honestly, especially DeFi and others, if you look at the usability, still quite difficult, not to say terrible. If you're not like tech-savvy, financially savvy, it's quite tough to go through. Step by step, I'm pretty sure we'll see like more and more payment embedded into the experience just to smooth the process, and all those friction will be reduced. But to use it, like for instance, for unbanked people, right now for small amounts, there's so much friction, so difficult that nobody addressed it properly.
Well, have you tried to wire USD somewhere internationally? That's a much bigger friction than you trying to send your ETH or USDC. That's an interesting point, because I do agree that UX can be, made better, but the whole point is that where we are right now, if you try to wire USD to someone across the globe, it will be more expensive, it will be harder, and it's a higher chance of failure than you just sending USDC to that person.
The point is not there, just to engage a bit. You can ask in the audience who did a Swift transfer in USD, who did like a transfer through DeFi, and you will have your answer. It's not as easy. Otherwise, people would do it. Of course, everybody is happy to get the fee, lower, and if there is no risk and it's easy. The fact is, it's still a bit difficult, especially with what you do, like in terms of self-custody. You still have these issues that you can make mistakes, you can lose your own key, and then you lose your assets. So still have to be aware of that. Step by step, we see people will try to address it. So you have like semi-centralized model where people among different participants could help eventually to retrieve a transaction and others. I used to work in the banking industry, so we look at that, for instance. So we will get there in a form or another. Ideally, we want it fully decentralized. We know with FTX example, but it will take some time.
And that's why maybe, Renée, we can ask the question the other way as well, is what does the retail banking is going to bring to Web3? And I think as of today, if we asked people in the room who has a crypto wallet, I don't think we're going to go above 10%. If we ask you if you have more than 2 or 3 bank accounts, most of us, we're going to raise the hand. We're all very familiar with finance and technology, so digital banking. What we see now coming up is that the banks are coming with their own wallets, in order to support digital assets. Of course, the ability to facilitate the remittances, the cross-border transactions, this is something that the banks are building up. And you can always ask the question, is there any centralization, decentralization? Ripple bring a solution. It's a central governance company. So you always have, at some degree, a part of centralization, and this is required because you need to have responsibility somewhere and point of failure identification. So we trust that the banks and the retail banks are going to facilitate as well the adoption of Web3, bringing the infrastructure with the technologists. People, the founders of technology company are still going to provide a solution to those central governance companies. But at some point, we all need to have something on our mobile phone, which is easy and I would say usual Web2 experience.
That's great, thank you. So I want to now circle back to recent events, and I recently had a panel in New York a couple weeks ago where I had BNY Mellon. They were announcing the custody of digital assets, and in the past 30 to 60 days in existing finance, we've had institutional players like Citadel, Fidelity, Charles Schwab team up to launch a cryptocurrency exchange. So these are centralized but regulated entities. So my question for my panelists is, why now?
Why not? Those banks have been working already many years on it. So just to answer your question, I think some of them, so I used to work for ING Bank, who were looking at it when I was working with them since 2014. So it's not as new as what people think. It's what you see in coverage. I think it's interesting. People can get inspired, even the banks from decentralized finance, and we see example like JP Morgan, for instance, among others. So yeah, there is never a good moment. You cannot say I want to be sure everything's gonna be all right. You have to be innovative, learn, and be a pioneer as well.
Yeah, and I think that's just proof that even with current events, that cryptocurrency, Web3 is here to stay, and that even in a bear market like we're in today, the heavy institutional players, they're building. Yes. They're building to take the place of the FTXs of the world. The last point I want to make is on November 2nd, JP Morgan made its first DeFi trade. So JP Morgan successfully tokenized Singaporean dollar and Japanese yen deposits, the first ever issuance of tokenized deposits by a bank. So what are the thoughts related to TradeFi meeting DeFi, and what does that say for the future? Does anyone want to take that perhaps as a closing question?
I think globally what's happening in the DeFi environment, DeFi system, is trying to, there are trying to replicate with a decentralized governance the use cases we are addressed by traditional investment or institutional financial institutions. Excuse me. What we see, and probably also to answer to your previous question, we see more and more the traditional finance institutions embracing the technology, of course, because this is reducing their operating costs, so it is improving their operating model, and the other side, the ability to generate new revenue layers for them. That's for sure. But clearly, with what happened with FTX, what's happening now with Genesis, and what's probably going to happen with few other more in the next few months, is clearly the requirement to have trusted entities, fully regulated, to propose solutions to retail and consumer in order to protect by the process, by their ability to have access to indefinite funding, if we can say what we've seen since 2028, and the quantitative easing policy by the central banks, to have a system which is secured, where the people have a full confidence and they are fully trusted. That's what I think in terms of the two systems, not collusion, but just embracing or merging with each other. So for sure, we'll still have some services with a decentralized mode, and which is servicing, I would say, and that we need also better infrastructure, because we always see limitation, as I said, with the infrastructure, and on the other side, the ability to have a central point of trust infrastructure.
Okay, thank you. I see our time is up, but I was wondering if we're able to take one quick question from the audience, if we're permitted to do that. I don't see any hands. Okay, good. I guess we're good then. Thank you very much.
Thank you.
And thank you, my panelists.
Thank you.